All right, here we go. Week 8. Week 8, and it was a beautiful week. As always, I am Wesley Yates, and this is our Financial Freedom for Strategy. Just to jump right into it, real quick, I've got the disclaimer here. I am not a financial advisor. This is not financial advice. This is just me simply sharing what I've been doing with my money for my family. And if you'd like to ride along on that journey, you're more than welcome to. All right, so just to go over real quick, we are using Robinhood. If you'd like to sign up for Robinhood, here's a link right here. I think we both get a free share for that. I'm not charging for any of this right here, sharing everything. If you're watching this video, the link's below to all of these files and accounts and all of that right here below. So these are clickable links if you open up this spreadsheet. The tool that you see us using quite often is the Snowball Analytics. That is what we're using to kind of track our dividends, some of the performances, and just all around good tool to do some research with. If you'd like to use that, there's a link for that as well. If you would like to see how our portfolio is doing and check on it any time, there's a link right there, right here, boom. So trying to be as transparent as we can. We have been at this for, as I said, 8 weeks now. So far, everything's been doing really well. But where are we at? We're still in phase 1. For those that may be watching this for the first time, we picked our 5 weekly payers. We are looking for an average dividend yield above 35%. We want to make sure that those dividend yields have been stable or slightly increasing. We will see ETFs fluctuate over time, drop and go back up, but as long as we see them go back up and staying consistent where we need them to be, we're going to go with them. Our weeklies are going to be more volatile than hopefully our monthlies, which is why we're really focusing on building our initial cash flow, high dividend yields out the gate to get that cash flow going, to help that cash flow with our investment into stabilizing into phase 2. Our shares of our weekly payers are going to be bought evenly per dollar, and we're going to use our example as $5 a day into each weekly stocks. That we've got 5, that's $1 into each stock a day. That is, for our example, $25 total a week, and you can use whatever dollar amount that might work for you. The dividends that we've been receiving, we've been using to diversify into new weekly payers. Once we achieve an average of $5 per week in dividends, and we're getting closer. We've had our best dividend payout, I would say, yet, and it's been really well, working really well. So until we get to that $5, we have just been reinvesting at the dollar level into our current 5. Once we have, I would say, reached a certain point, then we'll use the dividends to increase your daily investment until we reach that $75 a week in dividends. That's what we're aiming for. That's the trigger to go into phase 2. Phase 2 will be where we're buying 10, picking our 10 monthly pairs and looking for a dividend yields above 10%. Shares, just like the weeklies, we're going to be buying evenly, and we're going to be investing half of our weekly investment as well as half of our dividend investment evenly across the weeklies and monthlies. All right, and we're rocking and rolling. Our goal total is to build this up to where we eventually have 10 weekly payers and 20 monthly payers and achieve $1,000 in dividends per week, which would be right at $52,000 a year. That's what we're going to rock and roll with. To see an example of the stocks that we have been looking at and utilizing for our portfolio, I've shared those right here. So those are the ones that I've been researching. Here's the ones that I've put money into. You can use the hyperlinks right here to go straight to those provider websites, those ETF websites, and read more about that. I encourage you that you do that. And you can see our average yield is, at the last time I updated this, it was at 47%. As you know, we've only picked 5 of these so far. I do have all of these that are on this list in my other portfolio, as well as I've been adding more to an additional portfolio. I did look at some of these, just an update. The GIAX does appear to be stable. It's just at that lower... Sorry about that. I had to go get onto my dog for barking. I don't know if that showed up in the video or not. But anywho, looking at some of these updates, GIAX, it is stable. It is lower than that 35% average that we're looking for our weeklies. However, it is looking to be stable, holding right there around that 22. We'll keep our eye on that. I've continued that one in my main portfolio. I'm still at a hold on the FEPI, which is this one right here. It does look like it's drifted up for this last week. I'm still going to watch it and see if it holds. So these two I am watching and seeing. Now remember, FEPI, I might not have covered this before, FEPI used to be a monthly paying ETF. Then they switched it not long ago to a weekly paying. So I'm wondering if that had something to do with the dividend yield dropping. So I'm going to keep an eye on that and keep going. I haven't sold any of the shares. They've still been paying. I'm just looking to see if they're going to stable at that, if they're going to restable and maybe come back up, hopefully about 25. Would love to see it go back up to the 30s. It would be lovely. XDTE, this one right here, it's just not bounced back. I've kind of kept my eye on that one. I've still pressed pause on that one right there. Several of the ones that we have in our portfolio, we're using an example, are still doing very well, and I'm happy with them. I have looked at a few more of the monthlies. They're still doing good. The only one that I've really pressed pause on is the, what do you want to call it, Rocky here. It's just not doing good. That one I'm probably not going to put any more money into and just keep riding it out. It's still paying, so it's still at least cash flowing. I just don't like it how low. Remember, our threshold for that one is really want to be above 10. I do have a few more that I've added down here that I am testing out. I do have money into them. I am seeing how well they perform. I've done my research. A lot of these came from the ETFs, as well as some came from some of the other, I would say, dividend investors out there that have looked like they're adding some of these or considering these to their portfolio. So I am going to look at putting some money into these in my main account, seeing how well they perform for us over time. So there's those. I am sharing those with you. Feel free to check those out, see if any of those work. As always, if you have any that you like, please share them so I can check those out as well and maybe consider adding them to the portfolio of example or any of the others. All right. So those are the stocks we've looked at. Those are the ones that we like that meet our strategy. Of course, we continuously monitor those. But for the 5 that we've got, which is the blocks, Coney, Who, TSII, and Utility, I've already made just to make this a little quicker, I've already put my $5 for Who and TSII. Remember, those are the manual ones. And I've already tracked everything. But just to go over a quick recap, we've actually got $2 to spend today, which is awesome. Technically $2.19, but we're going to spend $2 on the 2. That will make it officially $5 in dividend that we have made in just 8 weeks, which if they're thinking $5 is not a lot, imagine if we were doing, a dollar or adding a 0 to every digit there. If we were doing, instead of $1 into each one, we were doing $10 in each one. That would mean that we would have made $50 so far in 8 weeks. So we're doing really well overall based on percentages and passive income. I believe our passive income is still right at that 60. So I don't think we've dropped below 60%, even with all the down weeks that we've had. Now, last week it's been an 8.3% over the past week. That puts us at a profit of $16 so far. That's been the best week we've had. We've had a lot of red weeks or very, very light green. We'll say it that way. Let's see how each one's done individually. But all in all, our portfolio for these first 5 has had a very good week, and it's been nice to see a green week after all. Don't know how long it's going to last, but I'll enjoy it while it's here. You can see this one, we had about 39 cents, so not too bad, but 2.89% increase. We already got our next week's pending, and it looks like we had a nice little payout last week. Scroll up, 19 cents. So we already got our 19 cents, which is up. And going into the next, I'm just going to scroll through these. I've already got the tracker filled out for us. Then we'll see it all on the tracker. But you can see how slow Robinhood is at loading, so I didn't want to have to waste the time clicking back and forth. Let's look at our next one. Eventually, we're just going to do a summary of all of these and just jump into the other tracker to make it quicker. This one, also really nice week. 21% 1 week. That's beautiful. I like that. Going down here, we'll see 40 cents. I think that was our top payer this week, which is really nice. Going into the next one, Yeah. This is one of our manual paying. I believe it is because it is leveraged, which means when they're leveraged, when they have a good week, they typically have a really good week. And if they have a bad week, they have a really bad week. But I think this one was green as well. Let's go for the week view. Yeah, 15%. This one paid out, as you can see, queued. We already got our $5 purchase in there for the week, 47 cents. So this was actually our top pair. I spoke too soon. 47 there. Last but not least here. Let it load, let it load. All right, here we go. So the past week for Yield Mac Ultra, this was our only down one. So it was only down 2% though, so 72 cents total. We still have our reoccurring daily dollar in there and 37 cents. So what does that look like on our tracker? That looks pretty good. It looks like we made a total of $1.70 total. So adding up these other changes here, the cents, this is, I think, the fourth week in a row that we have been able to reinvest $1. And this is be the first time that we've got $2 to invest. So we're getting some traction on that. Once this starts to look at, remember, when that right there says $5, the very next week we will be looking at our new, that would be our 6th weekly dividend down here, and we'll add that. All right, so looking good there. Let's go ahead and pick it. So we've got an extra dollar in all of these, but Coney and Ulti. So we're gonna go and buy one more of Ulti. $1, boom. And that'll be queued for tomorrow. That moving by. All right, there it is. Let's go over to Coney. Make sure we got our extra dollar in Coney. Double check, make sure I didn't misspeak. Yes, Coney. All right, that should be loaded. Come on, Robinhood. There we go. It's like it knows I'm recording it, so it wants to be extra slow. All right, here we go. Get into Coney. Spend our extra dollar of dividend there. Rocking and a rolling. So that was our first week that we've got to spend $2 in dividends. All right, here we go. Did that go through? That went through. Okay, sweet. So let's make sure we update our spreadsheet, our little tracker here. This tracker is also shared for y'all. If y'all like it, feel free. If you want to build your own, build your own. So we have now made $5 in dividends. We've invested a total of $180. And as y'all saw, our portfolio is now valued at $214 as of today. This was synced 4 hours ago. I'm just going to leave it based on the last sync. But here we are. 60%. Like I said, I don't think I have seen this portfolio drop below 60% passive income, which is ridiculous. A 12% IRR. If you want to see what is IRR, you can hold that over right here and I'll explain that probably way better than I can. But it's another way of tracking total return over a period of time. Our total profit, and this is going to be the equity, and it's going to see, you can see top value, and then plus it says profit excluding dividends and sales. So another right there. Gains 5.79, dividends received 6.05. So this is saying we've received a total of $6 in dividends. All right. It might be tracking what's already pending there. So, but that's not bad. I'll take it. I'll take that. And up weeks are nice to see. Down weeks are not so fun to see unless you're saying, hey, I'm buying more dollar cost averaging. I love to see this. Our top daily gainers right here, we've got all 5 in the green. So I love that. We had a nice, Robinhood did very well. I should say Roundhill did very well this week with Robinhood. But everything else looks pretty nice. So as of this sync, about 4 hours ago, everything was still in the green for the week, or sorry, for the day. Let's go over here and let's just go to the individual page and look at our actual dividend calendar. As of right now, it's saying, hey, we're looking to make $110 if we didn't invest in anything else, making $110 for the year, and still looking at 30 cents a day. So that yield here is right at, you can see 59.97. So still right there at that 60%. Doing good for August so far, looking to make a total of $6. I have to go back and look at some of the old videos and see what it projected us to make at the beginning of August. Let's look at not just 1 year here, let's look at this current year. So we made $2 to potentially on track to make 6. I tripled our passive income with the same amount of work, which is beautiful. I don't know any job I've had where I go to work the same amount of work and I get paid 3 times from I did the previous month. I'll take that job. But here's our calendar for the month. That is July. Let's swing over to August, our current month. Keep an eye on these if you're using this tool. The color, I just noticed this week, or this past week, I updated some of my old ones in my main account. If this is blue, as you can see right here, that blue means it's been declared, but it has not been paid. So if you have some that you're seeing that have actually been paid, there was just a sync that got missed, you can click on these. And here, let me go down here. Click on one and you can mark as received and type in what was there. So if it didn't pay out, in fact, 22 cents, it paid out 25 cents or 13 cents. You can adjust that and type that in there and save. So this tool does give you a chance to manually. Now, I didn't click anything and put that through because it's still syncing right, and it's not. That's tomorrow. So far everything's marking and tracking correctly as far as what we've been tracking. But just to show you all, as I learn things about using this tool, I'll share those. But I really do like this feature right here, so I can see, hey, what am I getting paid? What's coming up? Let's look at our goal. Remember, we really want to try to achieve this by the time she turns 21, which I believe is right here. And this is the year that she would graduate. So 19, 20, 21, right here. So we need to figure out how to cut off a year. And we might be able to do that, as the strategy says, with margin once we get to that point. I don't want to talk about margin just yet, but once we get to that point and consider using it, I have used it with some of my others. I'm always very low risk on the margin. I have never exceeded, I think, 10%. I would probably go up to 20% of my portfolio, but I like to keep myself out of a margin call. But this is tracking where we are right now. We're still on track to 8%, still at 0%. But the idea is we're really only investing $25 a day to achieve $52,000 a year. So it's going to take a bit for us to get this going and ramping up. Going over to the holdings, I've been keeping an eye on that. You can sort by your dividend yield here. As you can see, our lowest one is the 33. So that blocks is about the only one that is below our threshold. But when you look at our total overall average, like I said, we're still staying above that 60%. And we picked these 5 for the fun of having a dividend payment every single day. As you saw on our calendar, we are getting a dividend payment every single day. I do like to check on this for the yield just to kind of see how things are moving for us. Is there anything else that I need to look into? If that one, I notice next week, if that's down to 27, I'm probably going to do some research and see, and hey, do we need to press pause on this? Do we need to consider another ETF? What's the best strategy? We can see our values that are increasing here too. So that's great. I think this is the only one that is below. No, we got this one too. So these two are the only two that are below our cost basis. But all in all, total profits, that's including with the dividends, we've got a positive across the board. Loving how this is performing. If you're getting 6% passive income in any investment, you're probably going to love that too. Now, once we start getting to those monthlies, that will average down probably closer to 30. I think my main portfolio is about 33 to 36 is where it keeps averaging. All right. I did have some questions. Actually, Logan asked some questions, and I really like those questions. So I'm going to read his questions, and then we're going to try to answer those using our tools the best we can. So his first question would NVIDIA, which is a very popular stock, be a good stock to invest in. He heard that Trump is putting a lot of money into it. So we'll see. Now, do I know if Trump's putting his money into it or not? No, I do not. Just because they put money into it, does that mean I'm going to put my money into it? No. But if I do hear certain politicians and big people, if you hear a lot of what's going on, it does trigger me to at least want to look into something. So what I would do is I would actually go right here. You'd hit the search button, and I would type in, now I might spell this wrong, so bear with me, NVIDIA Corporation, so NVDA. I was actually unaware that Nvidia started offering dividends. So that was new to me. So he got me. I was not aware. Now, is it where we're looking for our investment? No. But if you are one of those, I like equity growth. I think we can all agree that Nvidia has done very well. Now, did I buy into Nvidia down here at like 120? And did I sell it up here? I think I started buying down about right here. And I kept riding it, and I think I stopped about right there. And then I rode it all the way up, and I think I sold somewhere around 258. I don't want to be lying to y'all. I might be lying to y'all. 228. It was somewhere. I know it was over 200. Oh, no, sorry. It was a 200% overall rate of return. So that's what the percentage of return was. It was not 258, the dollar. It was percentage. I'm going off of memory here, too. This was before when I was buying anything that I heard. I got lucky on this one and got to ride it up. It's doing fairly well. But if you look at how long it's been around, I think it is open February 20th in 1999. Ooh, that's been a while. So before it really took off, it took a while to take off. But when it did, it took off great. Now they're offering dividends, which is something that I didn't get the benefit owning it before. Would this be something that I would consider for my strategy in this portfolio? No, it wouldn't. But has Nvidia been a high performer in the past? Yes, it has. Over the last 2 years specifically, it has taken off drastically. If you look at that just in the last, let's just say last year alone, we're still up 20%. So that's a really great, increase. We're not looking for equity growth. We're looking for cash flow. And 0.47 in the dividends. As you can see, when this actually started, they just started paying. Let's see, when did they start paying dividends? It says they started paying all the way back then. I have to go back and look at that account now and see if I ever received dividends. It was such a small amount, I probably didn't notice it. As you can see, we're talking about, that is, when is that? 0.2 of a penny per share? Not a lot. So is this something that I would look at? I mean, this last one, it did 25 cents a share. If it does that, oh, now it's cool, but this is also quarterly. We've got some that pay more than that per share weekly. And we'll look at some of those just to show you on that. Actually, let's look at one of our top performers over here. What was our top performer? Let's just say TSII, which highest yield. Let's see the payouts right here, just so that y'all can see what I'm referring to. 30 cents a week. So which one would you rather have? 25 cents a quarter? 25 cents a quarter. Really, it was 1 penny per quarter for the longest time. This last quarter, it did very well. Or would you rather have something 30 cents a share for that, especially when this share is, what is the price right now? 13.59 per share. Nvidia is 214 per share. What is the cost of your cash flow? That's why this dividend yield is so low. It is very expensive cash flow. This is for those that really like the idea of the equity growth. Great question, though. And it's good that you're looking at what are other people doing. Love, hate Trump. I'm not going to get into a political battle there. Man knows how to invest. I think we can all at least agree on that. So if you're watching what other people are doing and learning, great. You're doing the right thing. Question 2. XST be a good stock to invest in? I'm not sure what XST is. Let's see if I can find it here. XXT, iShares, S&P. I've never heard of this. So let's see. Looks like it's got a 0.7 dividend. Looks like overall, let's just see, it's doing phenomenal. 533% return as far as growth. So that's beautiful. But the dividend yield, let's see, how long have they been paying dividends? It's a quarterly payer. And 10 cents every quarter. So, yet again, same as that Nvidia. Does it look, just in the quick snippet of just using this, not going to their main website, reading their strategies, reading their market reports, and what are they projecting and all of that, forecasting based on past performances. Not going that deep, just doing a quick, just to answer the question, would this be one that I would invest in for this strategy? No. But if you like equity growth within your portfolio, want some of those that obviously outperformed the S&P 500 or the Russell 2000, yeah, this would be a good one that would look for great growth, not for great cash flow. So, but yet again, good. Don't know how you found that one, but awesome. And last but not least, this is a good one. I like this one. What is the difference between a day trader and what we are doing? Really good question. Love it. And I think the best way to explain that is a day trader has got to educatedly guess. Traders are probably going to hate that I say that, but it is what it is. There are tools to look at the market. So let's just say let's go back over to Robinhood and let's just pick any. We were going to a lot of people day trade Bitcoin. Let's just pick Bitcoin. You can pick whatever stock, but to look at this, they're going to be looking at the markets. There are patterns that you can go to. I think TradingView is the tool I used to do to try to project what moves are happening, looking at the support. There's so many different strategies out there for day trading. Is it risky? Yes. Do more traders on average lose money than make money? Yes. Are those day traders out there that make bukus and bukus and bukus of money? Yes. So what is the biggest difference in this? You have to actually be making moves. You can put in puts or calls, basically shorting for the down and calls for the ups. On that, if you based on the market, the strategy, looking at it, I think the Robinhood, if you are looking to day trade, the Robinhood Legend view makes it look fancy here. But it would be a better tool. You can set this up, you can customize it however you want to see how things are going. Looking at your candlesticks, the wick, the direction, the volume of purchasing, which way is it going? Obviously, reds are sells, greens are buys. You can customize this to just whatever color on the trading view. I know people that look at the VWAP and it's just it hurts my brain. I am not a day trader. I've never successfully figured out day trading. I do have some friends that are really good at it. Do I look at some of those strategies for projecting? Is a stock about to turn around? Is the current portfolio that I'm looking at still doing is it healthy? Is it safe to continuously invest in? I do use some of those tools, but the biggest difference is we are buying and holding. They are following the moves to buy low, sell high, and they're trying to make those moves. So let's just say in their prediction, their goal would be to try to buy down here when they sell this great downturn, and then try to sell at the top up here. That's what they would do, or they would sell here, buy back in down there. That would be a put. Again, I'm not a day trader. That's the main thing. While we're going to buy this one. This is QQQI. It's one of the stocks that's in my main portfolio. And you can see, I'm just going to buy it. I'm going to hold it. I'm going to dollar cost average. So May 6th I'm buying. May 7th I'm buying. May 8th, 9th, so on and so forth. I buy every day, no matter if it's up, no matter if it's down. I think we've looked at one of these before on right here. The buying. Remember the pattern at the bottom? I explained dollar cost averaging. You can see every day that we buy, On this one, since it's been dropping, we've been dollar cost averaging down, and we've been dollar cost averaging up. Because we own shares, we get paid dividends. To make money as a day trader, you kind of have to project that swing up or swing down and take your profits. So, is it more risky to be a day trader? In my opinion, yes. Is it less risky to be a dividend investor? In my opinion, no. Is it less risky to be a dividend investor? Yes, it would be less risky. Confused myself on that one. I think I threw it like a double negative. My bad. Anywho, to not confuse anyone, I believe it is less risky to be a dividend investor. Like Warren Buffett said, I buy and hold forever. As long as that sucker's paying dividends, I'm going to hold it. Now, am I going to strategize and look into which of these are performing? I should probably say, which of these are performing well? Do they continuously perform at the rate that we're looking for? based on our strategy. Yes, as you can see, I've pressed pause on a few of these. I've added a few more to adjust for those. So those are great questions. If you like to look at day trading, there's 100,000 YouTubers that teach day trading. They've got Discord groups. I've joined a few of them. They're fun to get into. I've seen people lose 100,000 and win 100,000, or not win, but you know what I mean, gain 100,000. My buddy Clay actually is doing fairly well with the day trading. What I might do is one weekend or one day might have him come on and teach some of his tips and tricks on how he does day trading, if that is something of interest to y'all. I think what he's doing, I've shown him my strategy, and he likes the idea of day trading and taking his profits each day, showing him, basically sending those over to a dividend account and just investing his profits into a dividend portfolio to build that cash flow. Work for profits, invest for passive income. I like that strategy too. That's pretty neat. So, hit my 30-minute mark. I'm going to cut it here. Thanks for the questions. Keep asking questions. Keep doing your research. I encourage that. And that's all I have for you. I hope your portfolios are looking as good as ours, if not better. And if you've got any more questions, shoot them out here. If you have any suggestions, comment. Would love to see those. But that's all I got for y'all this week. Thanks for everyone for tuning in, and continue rocking and rolling. Thank y'all.